Good afternoon. This is Sean Golding with Golding & Golding, here to discuss two very common questions we get about the Fbar, foreign bank and financial account reporting. And they're the two most important questions, quite frankly. One, who has to file? And two, what happens if you don't file? What does the IRS end up doing to you, right? Normally it's not as bad as some of the stuff that you read, but relative to other types of international information reporting penalties, they can be relatively bad. So let's go through the basics. The FBAR is foreign bank and financial account reporting. Technically, it's on Form FinCEN Form 114. FinCEN refers to the Financial Crimes Enforcement Network. 99% of the time, it has nothing to do with criminal. Typically, what happens is U.S. persons are required to report foreign bank accounts and financial accounts to the U.S. government. It's not limited to just bank accounts. A lot of people, understandably so, right, think it's going to be bank accounts, but it's also investment accounts, mutual fund accounts, pension plans, life insurance policies, other items like that. So you have to file the form each year. It's filed electronically. It's due in April, but it's on automatic extension through October. You might see June 30th as the due date. That's old stuff, so don't worry about that. Currently, April 15th on automatic extension, so you don't have to file a 4868 or 7004. They can always change that though. So something to keep in mind each year around February, March, you want to take a look just to be sure. So who has to file the FBAR? Just like a lot of people understandably believe the FBAR is only foreign bank accounts, a lot of people think only individuals have to file. Well, individuals is one of the categories, right? It's U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test. If you're a U.S., let's say you're a permanent resident, you live overseas, and you make a treaty election to be treated as a foreign person for tax purposes if you're in a treaty country, it may impact having to file the 1040 versus 1040 NR, but you're still required to file the FBAR. Conversely, if you make a 6013G election as a non-U.S. person to file a U.S. tax return jointly with your spouse, doesn't mean that you're a U.S. person for FBAR. Keep it nice and confusing. Entities are required to report as well. U.S. entities, you have a domestic corporation. That corporation has foreign bank accounts. They're required to, the corporation, the entity is required to report partnerships and all that kind of stuff. Trusts and estates, this is something that we see often. So maybe a son or a daughter is the executor of an estate. Their parents unfortunately passed away, and now the accounts are in the estate name. They're foreign accounts, and so now the estate has to file as well, even though technically the money may not have been transferred to the beneficiaries or the heirs. The estate itself has to file. Now, what happens if you don't file the FBAR timely? We could talk about this forever, but let's keep it relatively short so you don't fall asleep. There are plenty of people that go their whole life, they will never hear from the IRS, okay? And there's a ton of horrendous fear-mongering online by international tax, self-proclaimed experts come lately, right? But as far as international reporting penalties go, the FBARs are pretty tough. So if you don't file and then you do file late, if you get in on one of the amnesty programs, you may have a reduced penalty, you may have no penalty, but let's assume you don't, and then you get penalized. Civil willful FBAR penalties are generally going to be 50% maximum value of the account, which is tough, right? If you have $2 million in the account, they can get you for $1 million penalty. They can get that penalty over multiple years up to 100% value. It used to be up to 300% value, which reflected a 50% penalty per year for 6 years, but they limited that, right? Non-willful FBAR penalties are all over the board. Some jurisdictions, such as California, they limit the penalty. Well, it's not statutory, right? It's based on the different circuits and the cases. There's an appellate case in California, which is Boyd, which says it's limited to $10,000 per year. That $10,000 would adjust for inflation, and it presupposes that the person did file accurate FBARs, albeit late. In the other circuit, Fifth Circuit, with Bittner, for example, they say in the Fifth Circuit that it's $10,000 per account per year. Generally, that goes up to 50% value, so not to exceed willfulness penalties. 50% value for the whole non-compliance period. They're talking about hopefully having the Supreme Court take a look at it, but it's very disparate depending on what jurisdiction you're in. And if there's facts that distinguish the case from the case on point, then it could lead to other outcomes and things of that nature. So something to keep in mind. that for civil non-willful Fbar penalties, it's kind of all over the board. There's criminal Fbar penalties too. You see those ridiculous websites flashing red lights that you're going to go to prison forever and lose all your money. It doesn't typically work that way. You forgot to report a couple of accounts. Maybe it was non-willful. Maybe it was reckless disregard. And willful doesn't make it criminal. Criminal is still criminal, which means they have to prove it beyond a reasonable doubt, not just merely preponderance of the evidence. If you're out of compliance and you need to get into compliance and you haven't been penalized yet, there's various amnesty programs. There's the streamlined domestic offshore, streamlined foreign offshore. Both fall under the moniker of streamlined filing compliance procedures. You've got the delinquency procedures, delinquent Fbar, and then the delinquent international information return submission procedures, a long-winded way of saying you can go back and file the forms. It used to be much more forgiving up to November of 2020, and now there's no automatic waiver. You can also do reasonable cause, of course, if you can show reasonable cause and not willful neglect. We have lots of free information available on our main websites and all of our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. It's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.